Hello guys and welcome back to the channel. So in today's video we're going to go on a trip to memory lane and we're going to look at a past crash and then we're going to use that data to extrapolate if Tesla and Palantir has more pain ahead or not. So this is potentially a very important video if you're an investor into Tesla or Palantir, but this is also a very geeky video. So I don't know, I just did research and I wanted to share it with you and it's going to be very interesting. So as always, please make sure you hit the subscribe button if you like this content, and if you want to go further, check out the first link in the description box below where you can support this channel through Patreon for $5 a month and get access to all the valuations, and you get access to me and to my eternal gratitude. So let's get into the video. I'm going to make my head really small, and as I said, we go back to memory lane. We go back to the 2009 crash. And, you know, normally bear markets last between 6 to 18 months. The thing is that this time is very interesting because growth stocks have been falling for more than a year. Since February 2021, most of the growth stocks have been falling. I believe Tesla peaked in November 2021, so it hasn't been falling for that long. But most, you know, Teladoc, Palantir, you know, lots and lots of growth stocks since February. So if you just look at that, we might be nearing the bottom. And I even myself had a stomach feeling, and I started to research this, that I feel most of the negativity has been priced in. And that is because, as I showed it in many videos, that how economists use their models is, you know, when there's bad news coming out, you know, they count it into their models. And let's say we know that the Fed is planning to be way more aggressive, and this is calculated into the models. So now when the Fed raises 0.75% again, it's not going to cause the markets to go down because it was already counted with. And the thing is that there's so much bad news counted in that I think that there starts to be risk on the upside, if you know what I mean, that people are not thinking with that there can good things happen. For example, the war between Russia and Ukraine can ease up. The oil price can go down. You know, the inflation can have peaked because it's been, you know, very high. And everybody's just thinking with max negativity. Anyhow, and at the end of this video, I'm going to show you news articles from 2009. It's going to be super interesting. But now let's look at, so this is the chart of the S&P 500. And you can see that the fall was from October 2007 and it bottomed on March 9, 2009. And if we look at the NASDAQ, you can see that the NASDAQ started peaking at the same time. However, it actually bottomed in the 25th of November 2008. Because this was also something that I mentioned in my earlier videos, that things don't bottom at the same time. And many people think that the growth stocks that have been leading the fall are also going to be the ones that lead us out of this bear market. And I mean, if you look at it, Palantir has gone from $6 to $10, whereas the S&P 500 has barely moved a few percent up. So maybe this is already happening. So now I wanted to look at, is this the same, you know, for stocks? Like, let's look at specific stocks. Let's look at Nvidia. You can see that Nvidia had an 80% collapse, started peaking pretty much at the same time, 2007. However, the bottom came around November 2008. This was the lowest price, where the NASDAQ actually bottomed in October, I think we said. And what's very interesting with Nvidia, and I sincerely hope that this happens to Palantir, although this is not good for investors, is look at the price action. So it starts moving, it goes from this $2 range to $4, and then it comes back to $3. And look at how long it's trading at the $3. So if you had a very big conviction in Nvidia, you could be going and averaging into the stock for 5 years. And then after 5 years, the price freaking blows up. And this is the best case scenario that you can have if you're a clever long-term investor, because it gives you time to, you know, just build up your position. So let's go over to the next stock. This is Netflix. This is also going to be very interesting. So here, this is where the market peaked, October 2007. And Netflix was actually going up into the recession. I don't know. The thought was maybe that people will lose their jobs and then they will be home watching Netflix. I don't know. And it bottomed also in October 2008. This was a stock that just shot straight up and almost 10x'd, or it more than 10x'd in a very short amount of time. So you see, this is actually contrary to intuition, is not good as a long-term investor because you're unable to build out your position. It's much better, even though it's very hard on your mind, to sit in a stock for 5 years when nothing happens. But I'm telling you, it gives you a chance to really build out your position. So Netflix was basically not even feeling this financial crisis, and it did bottom at the same time as all the other stocks. So now let's look at crude oil. So crude oil, funnily enough, bottomed at the same time as the S&P 500, not at the same time as NASDAQ, but it peaked much later. So this was the market peak, October 2007, somewhere here. And you can see that oil shot up 50% compared to that point. So this is maybe similar to today, that, energy sector has been beasting, and, now even the energy sector is 20-30% down, or actually crude oil is 20-30% down from the peak. So maybe we are in this phase now and oil is going to go a lot lower, but we don't know. So now let's look at another stock, Morgan Stanley. So this was a bank in the middle of the financial crisis, and it actually peaked later than the market. So this is also very interesting to see. Again, this is where the market peaked, and it bottomed pretty much at the same time as the NASDAQ has bottomed. So now we go to a super interesting stock. So this is Apple, and Apple has come out with the iPhone, which is one of the most successful products of this century and maybe ever in human history. It has seriously changed our lives. This is where the market peaked, and Apple bottomed in January 2009. After being, 60% down from its peak. And also Apple was a stock that just shot up and didn't give you any chance to build out a really big position. But this is funny how you can release the best product ever and your stock can go 60% down the following year. So very interesting case study. Let's hope Palantir is similar. So here comes the very interesting thing. I found an archive of news events in 2009 because so many retail investors, want to see that the Wall Street Journal says, now we have hit the bottom. And, CNBC has the bankers on screen who says, now we have analyzed it and now we have hit the bottom. And it's not as it happens. When you have the bottom, you have basically max negativity. And for many reasons, because, for a stock to go down, you need to have more and more sellers to sell. And normally when people are very negative, then they sell and they prepare for, the bad things to happen. And then as the time progresses, you have no more sellers to sell the stock because everybody knows it's going to go down. And suddenly you only have buyers, which inevitably makes the prices go up. So check out these articles. So I'm just going to read off some interesting ones. So we go from January to June. So in January, jobless rates reached 7.2%. Unemployment hits a 16-year high. Retail stores reveal a dismal holiday sales. This was in January 14th. Jobs announces leave of absence from Apple. This is Steve Jobs having his cancer and going off. Probably this was also affecting the stock price. Citigroup posts loss, confirms company split. Circuit City to liquidate, close remaining stores. Microsoft laying off. So it was layoffs, unemployment rising. This was the news in January, okay? Then in February, when the market was close to bottoming out, the news was Macy's cutting 7,000 jobs. Historic job loss in January. Unemployment rate went to 7.6, and the Senate approves stimulus plan. Japan in worst financial crisis since World War II. Automakers request additional bailout. President Obama reveals $75 billion housing plan. Stocks dive for 6th straight day. Lowest level since 1997. GDP drops 6.2%. So we can all agree it's horrible news. So this is March 9 when the market has bottomed. And this is where people expect that, Jim Cramer is going to come on and say that, okay, from now on, it's only good news. And let's see what happens. So again, Mark, keep in mind, this is the market bottom. AIG posts a $61 billion loss, receiving more bailout funds. Unemployment keeps rising. Okay, so it was 7 point something, now it's 8.1%. Stock market sees biggest day of 2009. Yeah, that was actually the the turning point. Madoff pleads guilty. GM chief resigning. So highest unemployment and, you know, bigger losses than expected, and one of the biggest up days in the stock market. So April, this is past the bottom now. So unemployment reaches 8.5%, so still higher than the month before. Japan will spend 99 billion on stimulus. Sallie Mae bringing 2,000 jobs to the US. Financial giants posting profits first quarter. Freddie Mac CFO commits suicide. Here we go. US Treasury tells Chrysler to prepare for bankruptcy. So huge blue chips companies going bankrupt. Highest unemployment. GM cutting 23,000 jobs, ending Pontiac brand. US economy contracts 6.1% in first quarter. So horrible GDP. I believe we just saw in January that it was also 6 point something percent. Definite recession, horrible GDP numbers, blue chip companies going bankrupt, and unemployment rate rising. So now this is 2 months past the bottom. So stress test, US banks need extra 75 billion in capital. US loses 539,000 jobs in April. Unemployment reaches a new high, 8.9%. European Commission finds Intel. Chrysler to shut down 25% of its dealers. Global financial crisis hits South Africa. So you can see 2 months after the bottom, still highest unemployment numbers. So the point where it gets really interesting is, you know, many people say like, don't buy, the market is a falling knife and you're going to know, when to buy again. And if you were buying at these prices, you made out like a bandit. If you were buying Nvidia, Apple, you 10, 20, 30, 40x your money if you were, holding for a long term. It was not at all obvious. You needed to go against common sense to invest at this time. So maybe June is different. Let's see. This is like 3 months after the bottom. General Motors filing for bankruptcy. So a new blue chip company. US unemployment reaches record high, 9.4%. The SEC accuses Countrywide of fraud. Yeah, Madoff sentenced to 150 years in prison. So you can see it's so interesting that the bottom is not at all obvious. And, your only chance is, knowing your valuation, having your models, knowing, for example, that Palantir is a fantastic company and below $10 is a steal deal. And when it's below $10, just keep buying. If it goes down to $6, be happy that it's down at $6 and buy more. God, I miss Palantir at $6 and I hope it revisits it so that we can load up for years and then we all can have a massive retail win. So anyways, let me know what you guys think of this video. It was very interesting. I didn't know that I was going to make a video about this, but I thought I'd take you on the journey down memory lane. Hopefully we learned something. So let me know what you thought. Thank you for watching and I'll see you in the next video. Ciao, ciao.